Broadcasting from the business capital of the world, this is the Podcast Business News Network.
Oh, yes, you can run, but you can't hide. It's here. It's tax season. It's coming. It's going to come faster than you think. And God bless you if you're going to have your taxes done well before April 15th. But let's think about all of this in terms of the preparation of that and how it can better financially support you. What are some tax tips? What are deductions that we can look at? All of that. That's in his wheelhouse as a certified financial planner, but he goes even deeper than that. They call him the Moses of finance. He's got his finger on everything, maybe goes to a higher power for some of that advice. Paul Jervey joins us on the program. Paul, welcome. How you doing?
I'm doing great, my brother. How are you?
I am good. I'm good. And yeah, I get like triggered when we talk about tax season. It's just, like all of us, you want to make sure you're legally getting the most that you're entitled to.
Yeah.
And I always wonder if there's stuff floating out there that I'm missing. And yes, you can have a great financial planner, bookkeeper, accountant, all on your team, whatever it may be. But they're only as good as the information you give them.
Yeah.
I often find. So why don't we start that from the taxpayer level of what we should have in mind, and then as it goes to you, and then you execute it to make sure we get the most deductions possible.
Yeah, man. So the tax planning portion of financial planning is, I think, underutilized by a lot of advisors because they don't understand the tax code. It's a lot of study, it's a lot that goes into it. There's a lot of follow-up, and you can't really make a whole lot of mistakes. But once you understand it and you know how it fits in to a client's financial puzzle, it's dynamic. So I use these strategies myself. I try to employ as many of them with my clients as I can. What I want to do is also tell the listeners that if you are a W-2 employee, there are very few deductions that you can get outside of the mortgage, children, student loan interest. If you do have the ability to itemize, you can, start deducting charitable contributions, those sorts of things. But outside of those, it's really tough. So a lot of my higher income earners sometimes are always looking, Paul, what can I do? What can I do? I'm maxing out my 401k. I'm getting the interest deduction. I'm doing this, but I still end up owing the IRS money at tax time. And the answer is you got to start a business. It's pretty much what it boils down to. Entrepreneurship in this country is afforded so many different tax credits, deductions. It's insane the amount of things that you can do. And Steve, I'll tell you a quick story. I think it was in 2020. My wife and I owed the government 26,000 and some change that we had to write a check for. And I remember I sat down with my CPA and I said, hey, I don't want to do this ever again. It didn't feel good. I understand, you got to do it, but not 26 grand. And so we came up with a strategy for 2021 to make sure that my business showed a loss. And so we executed on that strategy. We can dive deeper into some of the intricacies because this may work for a lot of your entrepreneurs that may listen. And we ended up getting, in the 2022 year, 36 grand back from the IRS. So we were able to utilize the business to really help us infuse the tax code within our financial plan, on top of utilizing saving strategies that will allow us, when we get to retirement, to control how much taxes we actually pay when we get there. So I know that some people have some questions. I'm pretty sure you do too. So hit me, because this is a topic I love talking about.
Oh, rolling up my sleeves.
There you go.
I own a business and it's an LLC. And I always wonder if I'm getting the most that I can get back, because I pay quarterly taxes. And I think it's a lot.
Yeah.
I really do. And I don't know how to, I'm going to, and thank you for your transparency on that. I'm going to do the same. I'm financially illiterate. I'm a creative guy. Numbers don't do anything for me. They actually bore me. But yeah, I got to pay attention to it.
Yeah.
What are some of the things that we can write off the write off? I didn't mean to even bring those two
Yeah.
words, but right off the top in terms of what we should be looking at as a business owner. Let's start with an LLC.
Yeah. All right. So first thing first, and the strategies that I'm going to dive into, it's highly important that everybody sit down with their personal financial planner, or you can definitely reach out to me. Be glad to spend some time with you going through this, because the strategies are going to be slightly different for everybody. So the first thing is that if you are an LLC, one of the easiest ways to start saving taxes is to file your taxes as an S corporation. So a lot of people think that an S corporation is literally like another business entity, when in actuality, it's not. It's just a tax filing status. So my business is an LLC, but in order to file as an S corporation, I pay myself a salary.
Mm.
And so because I pay myself a salary, I am cutting in half the self-employment tax that most owners of an LLC end up paying, which I think right now is around 15.3%. So when I do that, like again, transparent moment, I pay myself 120 grand a year. Okay, the business does way more than that, but I pay myself 120 grand a year. Out of that, my accountant and I have figured out how much taxes from our quarterly projections that we need to have taken out of that, so that I'm for the most part covered from a tax standpoint. So therefore, I don't have to do the quarterly taxes anymore, because it's coming right out. I'm paying the Medicare, I'm paying the payroll tax, the Social Security, all of that stuff. So I'm getting that covered, but I'm also getting an immediate deduction of 120 grand off
Well,
of my business.
interestingly, and again, forgive me because I'm not the expert here, far
Yeah.
from it. However, looking at it that way, do you file as a sole employee?
So no. So I do have employees that work with me,
Mhm.
but I do get a W-2 from the practice. So I have to file a business return as well as a regular 1040 that's in conjunction with my wife.
And that's the difference there, because a lot of LLCs, if it's a sole entrepreneur,
Yes.
they're filing
The Schedule C, I believe.
right. So essentially, isn't it you're filing as a individual and a business? It's all kind of lobbed into one.
Somewhat, because when you start to pay yourself a salary, there's a specific document.
Well,
It's
no, I'm sorry. I should be clear about that. I'm not
okay.
talking about the S corp filing. I'm just talking if you file just as an LLC, you're kind of
Yeah,
filing it all in one.
all in one, all in one. Yes,
Yep.
all in
Okay.
one. Yep.
Got it. And there is the potential, if you're filing that way, that you're not paying social security taxes. You're not doing any of that. You're just grabbing a salary. Yeah, I'm calling it a draw. You're taking a
Yeah,
draw.
we're calling it a draw. Exactly. Yep. And so because of that, that Social Security and Medicare tax is called your self-employment tax. And so they hit you a little bit harder at the 15.3%. I think that's the appropriate percentage number, but that's what they hit you with. So a lot of business owners are getting hit with that right off of the bat, and it's going to be a percentage of your gross profits, of your profits. So revenue minus your expenses, whatever that number is, they're going to hit you with that self-employment on that number, and then it's going to that number is going to move to the front of your 1040. And so if you're married and your spouse is making 100 grand, your business just generated a profit of 200,
Right.
you're now in the $300,000 tax bracket. You got to pay that plus the self-employment tax. You're getting killed.
It almost sounds like a no-brainer.
Yeah.
Okay.
Yeah. Number
Um,
one.
when you switch it over to filing just as an LLC, but filing now as an S corp, how do you get paid? And again, let's look at it as it's you, maybe an employer, maybe just you. How are you getting paid on a, monthly, biweekly basis, whatever it is?
Yeah, so I'm set up bi-weekly. I have a payroll company that I use.
Okay.
Some of my clients have they've learned QuickBooks. Like my accountant who I do business with, he does bookkeeping and can structure your QuickBooks to do all of that. It was just easier for me to hire a payroll company for the intricacies that I do. So I get a check every other week from the business, and I'm putting money into our 401k, which is also a tax deduction as well.
Sure.
And another big deduction as well, when once you are doing something like that, is you can have a 401k onto your business, but you can also add a profit sharing onto your business. So I think this year you're able to put like 22, maybe 25 grand away into your 401k. But once you add that profit sharing component, you can get up to $50,000 that you could put away, which is going to be a deduction. There's even something called a cash balance plan. This will get a little bit advanced, but for those high income earners that their businesses are generating a lot of money, you can even add what's called a cash balance plan on top of that and stock away in the six-figure range. And that is a 100% deduction off of your
Wow.
business. So these are the things that financial planners bring to the table for their clients. It's these ideas and these strategies. And I have strategies for days that I could share with you. But the most of the time, your CPA is just going to file your taxes and look at things and say, oh, well, you might be able to do this, you might be able to do that, but they're not going to get very creative and say you can do A, B, and C. And then our job is to project for you how this is going to impact your taxes so that you can see, hey, look at how much you're projected to get back from the IRS by employing these strategies.
Wow. The S Corp thing, I've heard that many times before. Even my bookkeeper has talked about it. Is there, based on your knowledge, is there a way to not use a payroll company? Let's say if you are a sole entrepreneur, can you set QuickBooks to generate your biweekly salary, whatever it is?
Yep, 100%. 100%. And then you can still do a draw. So I still do a draw from the business occasionally. So if I need to, and that money, when you do that draw, is now not subject to the self-employment tax.
Wow, interesting. All right. So other deductions, just in general, what can you share with us? What should we have on our radar?
So I have my kids on payroll. That's one. That's a major deduction, and I use that for their future planning. So the money that I'm putting into their account, so I have a custodial Roth IRA set up for each one of them. For those of your listeners, a Roth IRA is a non-taxable retirement account and that you can open for minors. So I'm putting money into there, plus their college savings accounts, which is a tax-free account as long as it's used for college. So when you think of that strategy by itself, in the business, I'm paying them, and because of the amount that I'm paying them, I don't have to withhold any taxes. So my business is getting a deduction dollar for dollar from what I'm giving them. It goes into a custodial checking account that I have for them. Then the money gets dispersed into their custodial Roth IRA. That dollar is still never going to be taxed. Then it goes into their college 529 account. And that money, as long as it's used for college, is still never going to get taxed. So the money that I'm putting away for my kids, the IRS can never touch it.
Wow. All right. I want to go back to that because that sounds legally crafty, if you will.
Yeah.
So your kids are on the payroll. Can you share how old? Just one. How old are we talking?
The oldest is 13. My next one is 9, and the other one is 4.
Say no more. So doesn't matter what they're doing. They could be contributing to the business. I have a 15-year-old daughter, and she could be helping with the business. So she's on the payroll, or one of your children, or all on the payroll. They're commanding a salary. It could be negligible, but since it's so low, how low does it need to be where you don't have to worry about a tax implication?
I want to say it has to be under, and any CPAs that are listening are probably going to get mad at me, but I think it's under 20 grand. I want to say it's under 20 grand. I am not paying my kids that much, but you also have to be careful with those that are under 13 because the IRS is going to frown upon that unless they are doing something creative within the business. So my 9 and 4-year-old are models for my business.
Gotcha.
So I do brochures every year, new brochures, and that's what I pay them for, to model for me.
Cool. Hey, somebody else could be paying them. Why not you?
There you go. There
So
you go.
when we take a look at that salary that they're getting, that money goes immediately into the Roth IRA, like immediately placed in?
So it goes from once they get there, they get a direct deposit into a custodial checking account where I'm their custodian or their overseer. So
Okay.
I have control over those dollars, and those dollars should we'll put in quotations should be used for the children's benefit. How some of my clients that I've given this strategy for, how they decide to use that's their business. But once it hits that custodial account, then I have a systematic withdrawal set up for the money to go into the Roth custodial Roth and the money to go into the 529.
If you didn't want to put it into the Roth or the 529, could it just accumulate in that custodial account?
Yeah. Yep.
And you
Yep.
could
And
take money out of that as you see fit, whatever it might be, as needed, whatever.
correct. Correct. Yeah.
Wow.
And as you set it up, again, this is, you want to make sure that you're within guidelines because the IRS did hire last year over 80,000 new agents. So, and that's because people are getting, and advisors are getting very crafty with their clients on how to navigate the tax code. So, yes, you could use that money and let it accumulate in the child custodian account. And you could use it for other endeavors, so to speak. But the primary purpose of that account is for it to be used for the child's benefit.
Gotcha. Okay. Do you file a separate tax return for the kids that are on your payroll?
Yeah, they get what is it, a 1040 EZ form,
Yeah, just a basic form.
basic form.
Wow. And again, final thought on this strategy. Having a child on your payroll does what for your tax situation?
So 100% deduction, dollar for dollar. Dollar for dollar. So if let's just easy numbers, I'm making 100,000 in my business. My normal expenses are 60,000, and then I take that other 40 and split it amongst the other three. Now my business basically just broke even. So the only amount of income that I'm going to claim is the income that I paid myself that I already paid taxes on. So 9 times out of 10, I'll end up getting a refund back.
Wow. You're good. Yeah. Nobody talks about this kind of stuff. That is super cool. And legal and perfectly legal.
Yeah, 100%. 100%. I got another one for you if you're open to it.
Yes, I am.
All right. So this one is slightly different, but it's um making sure that your listeners are putting money into Roth IRAs, that they're also putting money into brokerage investment accounts, life insurance accounts, as well as their 401ks and stuff like that. And when you get to retirement, what's going to happen is your 401k, you want to look at that as a partnership account with the IRS. So your 401k, your SEP IRAs, traditional IRAs, they're all partnership accounts, meaning that whatever tax bracket that you're in, that let's say you're in the 25% tax bracket. Well, that's the percentage ownership that the IRS has on that account because that's the amount of tax you're going to pay when you take money out. So only 75% of your 401k in this hypothetical scenario is your money. So let's just say we get some weirdos in Congress and in the White House, and they end up raising the tax brackets again. And now, if you make $100,000, anything over 100, you might pay 50% in taxes on, hypothetically. Now, is this something that could happen before or could happen? Yes, because it has happened before. Back in the Reagan era, I think if you made over 250,000, you got taxed at 70%. All right. So is it something that the government could do again? Quite possibly, especially if we're at 34,000 or $34 trillion in debt, right? So how you navigate this is by during your working years, you put money into these different buckets that get taxed differently. So if you have all of your money in a 401k, then all of that money is going to be subject to whatever the taxes are at that time. But if you have money in, say, a Roth IRA type of account or a Roth 401k or a life insurance type of program or a investment account, a brokerage where you're only taxed on what we call capital gains, which is lower than your income tax. If you're structured in that way, you can control how much taxes you actually pay the IRS in your retirement. Because let's just say if I need let's say I'm living on 50,000, but I need an additional 50. And if I take out that 50, because I'm now bringing in 100,000, I'm going to pay 50% tax on my money in this example. Well, if I take it out of the 401k, I'm going to get hit with that tax. But if I take it out of the Roth, I'm not going to get hit. If I take it out of the life insurance, I won't get hit. If I take it out of the investment brokerage account, I may get hit. But if I take my own money out that I've invested, that money's never taxed anymore. It's only taxed one time. But the new money, the gain of those investments, that gets taxed at a lower bracket. So I could easily manipulate when I get to retirement and I need to get my money out, how much taxes I want to give the IRS.
And I want to share with everybody, we talked about retirement last time we got together, and the podcasts are out there. I don't know if they're on your website at this time, but they're out there. We do a search.
Yeah.
And that's clearly what we talked about in terms of taking your retirement money at retirement age, before retirement age, from 60 and a half on up to say 68 or 70, whatever it might be, if you're still working. So there's a lot of variables there.
Yeah.
And I think you had said every year you gain or you take away 8% of tax of what you would be taxed.
Yeah. So on your if you're taking Social Security, the earliest that you can take Social Security is going to be age 62, and if you wait or delay it, as we'll say in our industry, that Social Security check or payment will grow at 8% every year up until age 70.
Got it. And just a final thought on just that. If you were to, let's say you were, I don't know, 61, so you passed the 60 and a half threshold,
Yep.
and you would take money out as opposed to taking it out if you were 49. What are the two implications there? What are the challenges with tax?
Yeah. So if you have a 401k type of account, the IRS is going to tell you that you cannot touch it, or if you can touch it, but you'll get penalized. So the person who is 49 and takes the money out will pay regular tax, but will also pay 10% penalty of what they took out.
Gotcha.
Versus the person who is age 59 and 6 months or older, they don't have to worry about that 10% penalty. They just would pay ordinary income tax.
Got it. And my bad on that. I thought it was 60 and a half, so it's 59.
Yeah, no problem. No problem, brother.
Yeah. Wow. Interesting. Got like a minute or so left. Any fast tips that we could throw out there? This is great, by the way.
Awesome. So yeah, make sure that your CPA is giving you creative ideas. If not, then your financial planner should be giving you creative ideas. If not, then it's okay to have one or two financial planners. Maybe you've got one guy that you like because you've worked with them for so long. Maybe they've been managing a good portion of your money, but then you need a planner that's going to help you strategize, kind of like what we've talked about. And then for some of you, it may make sense to just be uprooting and move to somebody else, because a lot of advisors can help you get to the point of retirement, but not that many people are structured or are educated enough or experienced enough to help you through retirement. It's a completely different ball game.
Sure.
So just some things to consider, and that would be my tips.
The difference I detect with you is you could be working with somebody and they might say, yeah, you know what? In the first example, the LLC versus S Corp filing, the one planner may say, or accountant may say, yeah, you might want to do the S Corp. It's going to benefit you. I detect in you, Paul, you're going to be, listen, stop everything. This is what you need to do. Do you realize how much money that you're not getting by filing this particular way? It's almost as if, you're standing on the mountain and the sun is shining and you're like, you got to do this. I'm telling you right now. I want to ask you one final question. You gave the example 120K. And again, this is very hypothetical. These aren't exact numbers. Ballparking, very rough ballparking. 120 filing as just a straight out LLC, how much tax you may be paying in a year versus what you might pay S Corp. Is that even possible to just throw out there? Very raw.
It's tough. I would probably say, and again, because there's so many variables.
Yes. Curious.
I would probably say at least Maybe again, ballpark, maybe 10 to 15 grand more if you
Wow.
don't use the strategy. Because when you think about that payroll tax is 15%. So just
Gotcha. And you're at it. Okay. Yeah, fair enough. That's it. I didn't mean to push you. I just
nah, you're
wanted, you
good.
know, and wow. Why would you? Why would you not? Paul, always great hanging with you. Love the tips, love your energy and your passion for all of this. How do we find you? Somebody wants to connect.
Yeah, go. So for this, we've been talking about my planning practice, which is Jervey Genesis Solution. So you can go to this website. It's www.genesis, GENESIS, WMS, William Mary Sam.com. Or you can give us a call and my operations manager will pick up and glad to talk to you, which is 302-543-7424. And she'll schedule an introductory meeting with you, no cost for that meeting, and then we'll just see how we can help you.
The operations manager is 9 years old and on the payroll. I'm kidding. I'm totally kidding.
That's good.
Well, I'm going to be hiring my daughter. She doesn't know it, but she's getting hired.
There you go.
And that's awesome.
There you go, man.
All right. Appreciate you. Thank you so much. And we'll catch up soon. Okay.
Sounds good, my friend. Take care.
You too. We'll be right back.
Are you looking for even more of the podcasts and hosts that you love? The Podcast Business News Network is proud to announce that you now have even more ways to listen live. Check out the MyTuner Radio, online radio box, and Simple Radio apps on iOS and Android, or find us online. Search for Business News Network on mytuner-radio.com, or search Podcast Business News Network on streama.com and onlineradiobox.com/US. Take your podcast on the go and don't miss a minute of the action.
Broadcasting from the business capital of the world, this is the Podcast Business News Network.
For nearly 2,000 severely injured veterans, everyday life has become filled with barriers.
Day-to-day simple tasks can become pretty daunting.
I have to carry my chair up 2 flights of steps or have somebody do it for me.
What scares me the most is just the falling.
When I'm struggling with my house, I think, to have that one great barrier just knocked down, it's crucial.
Home for Our Troops is a wonderful nonprofit that builds a
mortgage-free, fully adaptive, handicap-accessible house. And there's no catch.
It'll be our very first home that we've ever owned.
This is a game changer.
This is where your life begins again.
We need you to join us in completing this important mission. Please visit hfotusa.org and help build homes and rebuild lives.
Because of you, everything's going to be okay.